Watch here now, real estate broker Kirsten Jordan. Kirsten, always great to see you. So we look at the 30-year fixed Freddie Mac, right, heading towards 7%, and we think Jerome Powell is raising rates, and this is going to kill the real estate market. At least that's partially what the Fed wants to do, at least slow it down, not kill it. And you say there's like a little bit of a balance there, that yes, things are going to be, slower, but that not everybody's dropping out.
No, not everybody's dropping out. What we're really seeing is that buyers are saying, okay, if there's not enough new supply coming into my market, I'm either going to have to adjust the price point that I was initially ready to buy, because a lot of buyers have been in the market for a little while and they keep thinking more is going to come to market and that prices are going to come down. And if they don't come down fast enough, they get discouraged because rates go higher.
Right.
So it's really the balance of supply coming, prices coming down just enough so that buyers say, hey, I'm either going to come up with another alternative mortgage structure, because as you know, it's not just the 30-year fixed mortgage. There's other kinds of structures.
There are other ways to do it. Absolutely. Exactly. And you were mentioning while we were talking during the break that it really comes down to, when you get a mortgage, it's about your monthly payment, right? So if the bank is going to look at the $1 million house, let's say, that you wanted to buy, your payment's going to be higher because the rates are higher. And so if you can or cannot afford that on your salary, if you can't comfortably do it, they're going to ding you. But that person may say, well, I'll just adjust my expectations and perhaps buy a cheaper home if that $1 million home price doesn't come down to where I need it to be.
Exactly. And we're definitely seeing buyers also look at other alternative financing. They're looking at leveraging against other kinds of assets. Maybe they're doing a private mortgage with family members to be able to get where they need to be. Maybe they're going to put down a little bit more as a gift from someone, working ways so that they can find a way to finance that home, or interest-only mortgages, adjustable rate mortgages, other
but those got us in trouble last time.
Well, the thing is, though, is that people really are stronger borrowers.
Right.
What got us in trouble last time was lending to borrowers that weren't qualified. Now, everybody that owns, or most people that own, are qualified borrowers. So they're sitting there saying, hey, if things aren't really interesting, I'm not going to move and I'm not going to sell, because what am I going to get next for a rate?
Right. The banks definitely are doing more due diligence and checking out the backgrounds of the buyers. So that is a good thing. Having said that, if you are getting a mortgage from a family member, for example, or you happen to be lucky enough to be an all cash buyer, then you wait for the prices to come down even more and you get a steal. I mean,
you will, but I think prices aren't going to come down as much in markets that didn't see the incredible appreciation. I think the markets that saw maybe 5 to 10% of appreciation across the board, those markets, how much can they really come down? Whereas, yes, the markets that saw 30 and 40% appreciation, those markets, there's going to be some deals for sure.
But even in some of those markets that we saw, this boom, for example, Florida, right? Prices have doubled in some cases. I have friends who are down there now telling me it's very, very difficult to get into the market, whereas just a couple of years ago, they were giving stuff away. Having said that, I feel like there is this new view when it comes to Florida, especially from East Coasters, right? Who say, I like going down there during the winter. I can work remotely potentially for my job. So this whole Florida, living somewhere else thing, perhaps living there full time and not paying state income tax, that's here to stay.
Exactly.
So that's not one that would, right?
Yes, that was a huge shift. I think the places we're thinking are like Phoenix, Arizona. We're seeing parts of Texas that we're seeing, especially, for example, Austin, Texas, which saw, I think, in some cases, some markets we're seeing more than 50% of appreciation of homes, of luxury homes. So those markets, that'll be questionable. Texas, of course, is another tax-friendly state, so maybe for them that would be a little bit better over time. But I'm talking to agents down there that I'm friendly with, and they're saying things are really slow.
Yeah, and I've talked to a lot of people who did move elsewhere, not Florida necessarily, but having said that, and after 2.5 years, they're itching to come back now, too. People did that during the pandemic because they wanted more space and they wanted to be able to have access to different things. And now, we're out of the pandemic. We have been for some time, and people want their old lives back, too.
Oh, and especially young people, they want to be in these cities and they want to be seeing their friends. And I don't know. I mean, I guess you were talking before about dating getting a little bit cheaper, or people getting cheaper about dating, but I think people want to be in cities and meeting up and having fun and getting out there.
Right. Having said that, looking across the board and in your studies, what do you think is sort of one of the better value markets right now?
Well, New York City, I think, is a value market because of the fact that there's always something that you can buy in one of the boroughs, and there is constant demand, and people are still moving here.
And that's the thing. Prices have come down, but they're not coming down here. Kirsten.
No, exactly, they aren't.
Because the demand is coming back, and it's New York City. All right, great to see you. Always good to get your insight. Thank you.
Thank you.